Welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. And on today's video, we'll be talking about an S&P 500 REIT that should be in your portfolio. But before we dive into the video, I want to give all you guys a shout out there, 9 to 5ers, for hitting the like and subscribe button on the channel. It's one is letting us know you guys like the content, and two is helping the page grow. So we thank you for that. And if you're new to the channel, welcome. Don't forget to smash that like and subscribe button so you do not miss out on any future updated content. So let's go ahead and dive into the video. So we got VICI Properties. VICI is the ticker. Priced out at $33.89, up 21.43% the past year. It's up 70.94% the past 5 years. It's packed in a 31.85 PE ratio, so a little bit higher than the S&P 500. But VICI is a REIT, real estate investment trust, that specializes in gaming and leisure properties, such as Caesars Palace. They were formed in 2017. They've spun off some real estate assets and grown since then with Caesars Entertainment. As of now, they own 49 gaming properties, including the Caesars Palace here, the Venetian, the Mandalay Bay, MGM Grand. They own some property up in Detroit too, the MGM Hotel. It is the largest real estate owner on the Las Vegas Strip, which is huge to see because Las Vegas is always busy 24/7. So let's dive in. Look at VICI from an evaluation standpoint. It's packing a 32.84 PE ratio, a little bit higher than the S&P 500. Debt to equity is 0.41. What I do like is the earnings per share has been growing for the last 3 to 5 years, so those are good things to see. Casinos hit $60 billion in revenue, which is good for VICI, good for investors too, because that means that VICI, like I said, they own basically majority of the Las Vegas strip market out there. VICI has outperformed other S&P 500 REITs year to date. As you guys can see, 12.5%. Investment strategy is broken down here. So they got real estate acquisitions, as you guys saw with Mandalay Bay, the MGM properties, and so on. Partner property growth funds, where they work with existing tenants and partners to invest in growth opportunities across real estate. And they have the structured financing, where they secure new and existing partners across there's different sectors to generate different returns. Here is a lineup from 2017 of all of the acquisitions, along with the amounts that VICI Properties have acquired, which is good to see as well. Next up, we have our gaming revenue, just breaking it down, ranking it by state, market, and so on as to who was bringing in the most money for the gaming, which AKA means in the casinos. So as you guys can see, Las Vegas, we got Detroit, Atlantic City, New York City. These are just locations where the high quality REITs for VICI are located. They're all located in high revenue areas where customers are normally taking trips to visit, to spend money. So VICI has set themselves up to be in this position. Once again, Las Vegas is one of the biggest ecosystems for driving population, job growth, capital investment for years, and they're going to continue to produce out there. As you guys can see, in 2019, 42 million plus visitors, $7.1 billion in 2021 gross gaming revenue, which is an all-time record. And Vegas has 11 of the largest hotels in the world since 2020. So this is good to see too. So VICI is out there, guys. Here's another acquisition recently that VICI has put through, and it was Pure Casino Edmonton and Pure Casino Yellowhead. And those are Canadian companies. And then we also have Mandalay Bay and the MGM Grand Conference out in Las Vegas. They've also acquired the Fitz Casino and Hotel and Waterview Casino Hotel. I think this one's in Mississippi, Biloxi. Diving in, packing a 4.60 dividend yield. It's got a 15.64 5-year dividend growth. They've been growing that dividend for 5 years, which is good to see. Free cash flow has been growing as well. And the FFO has been at 80% for VICI. Currently, VIXI is trading at a FFO ratio of 17.7, which is a slight premium than their previous one at 16.68, which is why I was saying the PE ratio is a little bit higher than what the S&P 500 is. But I think that's fine. You pay for what you get. They have a strong FFO growth rate at 7.74%, and they're expected to increase that FFO by 10% this year. This VIXI's dividend track record is excellent in both consistency and growth, and is well supported by the growth of its operational earnings. And we've saw previously that the earnings per share has been growing, in the last 5 years. Long-term looking, this is 1 year looking out. I'm planning on getting into this stock as soon as the bell open up tomorrow. Not financial advice for anyone out there, but long term, VIXI is making a positive trend up to, once again, all-time highs. And this is why, we're talking about it here on the channel. Looking out long-term forecast, 12-month, they got it at a 7.79% upside, which is targeting to be at 36.53. Obviously, we're thinking longer than 12 months. We're thinking 10 years, 12 years, 20 years down the line of what this stock could turn itself into down the line. But these are good things to see. Thank you again for being here and listening to me talk about VIXI Properties. Once again, here on the Investing on a 9 to 5 YouTube channel. Let me know, guys, in the comment if this S&P 500 REIT should be in your portfolio, or if you're planning on adding it to your portfolio. Let me know in the comments. Thank you guys again for joining me here on the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. I thank you guys. See you guys in the next video. I'm out.